The final session this week is going to be extremely volatile. The highly anticipated non-farm payrolls will determine a further trajectory on Wall Street. The data will either reinforce investors' faith in the dovish reversal in the Fed's rhetoric or dispel any hope. InstaForex analysts are ready to present you with their fresh forecasts. After the rally in the middle of this week, the benchmark stock indexes again came under pressure yesterday. Wall Street indexes closed mixed, with the high-tech sector showing the strongest performance. The Dow Jones incurred the heaviest losses yesterday. The index was wound down by a sell-off of Salesforce shares. They tumbled by 8.3% after the software developer announced the resignation of its top executive. This event made the Dow Jones lose 0.56%. Unlike the industrial sector, the Nasdaq closed with modest gains yesterday, having climbed 0.13%. The S&P 500 closed with a downtick by 0.09% at 4,076 points. The three stock indexes traded sluggishly in the New York pre-market, awaiting the crucial data on the labor market. Before the publication, the indexes went down and extended their slide later on. The S&P 500 is expected to trade in the intraday corridor between 3,910 and 4,040 points. The stock indexes opened mixed in December. Shares grew in the early American session after the PCE price index, the inflation gauge preferred by the Federal Reserve, edged up 0.2% in October, a downtick below the consensus. Yesterday, the stock indexes traded in different directions because investors digested U.S. unemployment claims, which declined by 16,000 last week. The corporate reports also did not encourage optimism. The stocks of U.S. retailers went steeply down. Shares of Dollar General slumped 7.5% after the company downgraded the annual revenue forecast. Costco shares tumbled 6.6% because the company reported a slower growth of sales in November. Investors are also monitoring the news from China, in particular the signs that Beijing will soften its zero-COVID policy. China is going to relax some COVID restrictions in the near days and wind down the vaccination campaign because of the public anger sparked off nationwide clashes about the toughest lockdowns in the world. Today, Wall Street is trading with a moderate pessimism ahead of the U.S. non-farm payrolls. The stocks of the companies with a mega capitalization traded mixed in the pre-market. The catalyst for the stock market today is certainly the official data on the U.S. labor market. The U.S. jobless rate stayed flat in November at 3.7%, in line with the market expectations, not far away from the lowest reading in 29 months at 3.5% recorded in September. The unemployment rate has been stuck in a narrow range between 3.5% and 3.7% since March. It means that the labor market is set to stay tense for a while, thus cementing inflationary pressure in the top global economy. The U.S. economy unexpectedly added 236,000 jobs in November, surpassing the consensus for 200,000 jobs. The actual reading for October was upgraded to 284,000 jobs, the red-hot score in the lowest employment growth since April, but it still indicates the healthy labor market because the figure is higher than the average pre-pandemic growth of 150 and 200,000 jobs per month. The US dollar is accelerating its decline. Its index is pinned at the lowest level in 16 weeks against a basket of 6 major currencies. Having shed another 0.22%, the index fell to 104.40. The non-farm payrolls gave a fresh impetus to the greenback. After the publication, the index regained its footing and grew 0.7% in the pre-market. The intraday corridor is seen between 105.20 and 106.30. Now the US dollar is trading at a 5-month low against its rival currencies. Earlier the index plummeted to 104.36, the weakest level since June 29. All in all, the US dollar completed the worst month since 2010. The index slumped more than 5% in November amid expectations that the US Fed would ease the pace of rate hikes starting from December. The unemployment claims confirmed such prospects. However, the non-farm payrolls drastically updated the picture and provided the US dollar with a boost. So, the greenback is now gaining bullish momentum, and notably the labor market is not the only gauge considered by the US Fed before the next policy move. The Canadian dollar benefited from a temporary weakness in the United States dollar. The USD CAD pair was hovering at around its lows at 1.3230 before the non-farm payrolls. After the report, the currency pair instantly jumped 0.48%, trading with an intraday corridor between 1.3450 and 1.3550. Both currencies depend on the labor market data. The unemployment rate in Canada dipped to 5.1% in November from 5.3% in October. It means robust employment. The number of people out of the work declined by 23,800 to 1,049,000, whereas the number of employed people rose by 10,100 to 19,114,000. The Loonie found support from oil prices. The benchmark rates climbed roughly 1%, but the US non-farm payrolls pushed the oil prices down. Brent and WTI slipped 0.2% and 0.41% respectively. The crypto market seems to get used to recent shocks. Bitcoin consolidated its intraday gains at 17,000. Top altcoins also traded notably higher. However, the sharp reversal on the US dollar instantly shattered optimism in the crypto market. As a result, the flagship crypto sank to $16,800. The native token of the Binance crypto exchange completely lost its luster. The platform halted withdrawal of Anchor tokens because Binance CEO Changbing Zhao said that the tokens were probably attacked by hackers. He asked decentralized exchanges to freeze trading and said that the tokens would be issued again after the situation is assessed. The news was of a little importance to number one cryptocurrency. Amid fundamentals, the asset might again slide to 16,200 and settle below $17,100. InstaForex team wishes you to close this trading week with solid gains, and see you online next week.